Great. Good to go. Good morning, all. It's a couple of minutes late. Apologize for that. A little bit my fault. Contractor at the house I couldn't get away from, but before we start the meeting, I think I would just like to acknowledge Joanne. Joanne, you're retiring after you've only been working for 5 or 6 years. I know that, he's just, yeah. But you're this is your last audit committee meeting, I believe.
It is.
I'm sure you're hoping so. Well, so he said, we have to invite you back. We're in big trouble. But thanks for all the years you've spent with us. And, when you came on board, we had a lot of collective work to do. And with Brian and with the school district and with the town. And you made it easy, and we've got to a good place today. So thank you very much for all of the great effort you really put in and all the great results you. And Sean, congratulations, welcome aboard.
Thank you.
It's going to be just a ball, so don't worry about it. But I think we're in a good place. And every now and then I had to call Joanne, and she always had the answer. So it's a tough standard to measure up to, but I'm sure you'll be able to do that. So welcome aboard. If you need any help, we're here to help you. Any of the audit committee members. Ed Kangas is on the Zoom. Ed, how you doing?
Ed,
I'm fine, thank you.
So with that, we will call the meeting again, call it back to order again. We have an agenda which has been published. The first item on the agenda is the minutes from the April 4th meeting. And are there any corrections or anything of that nature?
no, Chairman.
Great. So we have a motion, I think, from Rob, and then we have a second from George. And so Ed, you're in favor. We're all in favor of the minutes.
I
Thank you. The next, we have a review of the for 2022 audit plan. And I guess Ann, Joanne, and Joe are just going to take us through that from an audit plan standpoint, timing, staffing, and so on. So Ann and Joe, you want to maybe just come up and talk about timing, staffing, and Joe a little bit about logistics. I see you're off the Zoom and back into the office. So tell us about that. How's that going to work this year? And what are you seeing from the audit work standpoint and starting? Are we ready to start? And we all synced up in terms of working?
We started some preliminary stuff already.
You might need the mic.
We started some preliminary work already, and then we have some more actually after this meeting. So,
Good.
No concerns right now.
Joe?
Yep. So, I mean, that's basically, we started transaction work, which we kind of, do that part remotely and then come down and start the audit. So we'll be doing what our planning meeting, our kickoff kind of planning meeting on the town side and the board side today to kind of just walk through what's different and just kind of, that's the first step and building the detailed audit plan.
When you do the vouching, if you want to see the supporting documentation, what do? You just ask if it's done remotely. Is that something you do when you get here? Is that something you ask the town to send you? How does that work?
Oh, in general, we leave it
Payable.
Yeah, we leave it up to the town. If they're okay scanning it, they scan it, or if they just want to pull it, we're going to come out and be here. So like we would have, I think most of them are right.
Yeah.
So they were scanned, but otherwise we would have done it today. So it's up to the town. There's certain things we want to do here, like we'll be talking to tax collector today, doing some of that work, the preliminary work around the straight book, and
the same thing at the Board of Education as well.
yes.
Good, great.
So are you back to the way you would normally do your work pre-pandemic?
I think it's evolved into kind of more of a hybrid where certain things are done remote and certain things are done here, but so sometimes it's just more of a logistics from a planning perspective. If it's just data analysis, like when we say we get trial balances, we'll do that in the office because it's more efficient to build the report and then come down and do the audit work. So
Not necessarily pandemic driven,
No,
efficiency driven.
it's just, yeah, kind of evolved more from efficiency and everyone kind of built the systems and got used to using the secure file for some of the stuff. So it just adds efficiency, but there are certain things we need to be here to do, like the planning meetings, or we prefer to be here to do some of the tax work. Looking at personnel files, those type of things. I don't really like, even though it's a secure portal, I don't like personnel information leaving the building. So try to avoid that.
How about your staffing? Is it, I know a lot of the accounting firms are having trouble keeping and retaining staff, and therefore staffing engagements, and it's sort of a business-wide problem as well. But I mean, how is that impacting us? Do you have a complete team and everybody in place? And
Yeah, I did have a manager leave last February, but I just hired a supervisor, and then one new staff started, and then somebody I have part-time started out of our Shelton office. So right now it's kind of back to where it was. Firm-wide, it's definitely a problem.
Right.
Still, just like everyone else, just not enough staff, but I'm more managing the workload, so I could do more work if I had more staff. There's opportunities, but I'm more managing the workload so I can meet deadlines and make sure
so
service
it's
doesn't suffer.
restricting new business and restricting new projects, right?
That's what's happening. Yeah.
And you still have the same manager, right?
Yep. Yes. Yeah. Catherine is still
Catherine. Yeah.
Okay, that's good.
Yeah.
still back.
That's-
Yep.
that's-
She's back. She
Same
last year
manager,
was
same partner.
maternity leave. So, but she's here today, just working with the staff.
Maybe you could talk a little bit about, let's just say timing, from the end of the year at June 30th and kind of the time frame for, let's say, closing the books, what I call closing the books and finishing off the numbers. And then, when that gets audited, let's say, and then when the financials might be kind of done. And because I understand that kind of your discussions have delayed things. I won't say delayed things, but made things be a little bit later than they have been. So maybe you could just talk a little bit to that.
So
And I'm not saying anything bad.
No,
about
no,
it. I'm
I know,
just saying
I hear
that
what you're saying.
that's the
Coming in-
case. I know George. had
typically it's
some
around
questions on
September, I believe, is when you start coming up with your, the audit and the main chunk of it. We're looking to do it in October for a couple of reasons, because of changes in staff, certainly in my office, two new the comptroller and and myself. And we recently, our accountant retired in April. So we're looking to push that to October to do the bulk of the stuff, and we'll be in a better shape, because then that'll give us time, certainly with making sure everything is in, because it's my first year going through it. I was very thankful that Diane, she went through part of it last year. She was a sink or swim and she did very well. So both of us now will be going through it this year. Yeah, she got thrown in the deep end. She did a phenomenal job. So having that accountant retire in April has made some challenges for us just getting the work done, which we are. It's been pushed around all the staff, so everybody's chipping in to get it done. So we needed that extra time to make sure we have everything in place to have it in October.
Yeah, and my understanding was maybe that would eliminate the need for, let's just say, continuing adjusting entries or something.
Exactly,
like that.
and not having,
So you have a final product before.
that's my
before
goal.
you do
I want to
stuff.
have it so that 99.9%, when we pass it over, it's done. And there's no back and forth and entries and making sure who got what. I want to make sure that when we give it to the auditors.
And you don't see that being any issue.
No, I mean, just, the last couple of years we had the September deadline, but what we got was just what they got through by that deadline. So they just gave us the information on the day they said we were going to, but it wasn't complete. It wasn't. So this is a better process, I think, year one. So it is more complete, and we'll work, through last year's entries to make sure, just understanding that'll be part of our meeting today. Okay, we do this entry every year, so can we just build this into the close process, that type of thing. But so
the key thing here is that if we're pushing the deadline back, which we did and we agreed to already, that the town doesn't just give you what's available at that point in time, that it's actually available, that everything's done.
It's complete,
Yeah.
yes.
And how's the Board of Education fit into all of this? Is this sort of the same type of schedule? Is it, are they done earlier and their information's already sort of in? Or are you still waiting until October for them as well?
I remember one of the new folks that came on board reading the CAFRA said, "My God, I've never seen one like this before." And the MDNR, and I was hoping that maybe we would adopt a more streamlined CAFRA report, including the footnotes to financial statements, which ran about 30 pages. So I'm hoping that we can make life a little easier by cutting back.
Yeah, we could certainly think there are certain schedules that are in the report that aren't required. I think last year we took out a couple of them. There are still a few more that are not necessary to be in the CAFR. Footnotes, we do try to minimize those, but unfortunately that's a GASB problem. So we don't do what we call too many gratuitous disclosures. They're pretty much what's required. So we can take a look at that, but that's tougher, especially with the CAFR program, because there's the checklist you have to meet.
Yeah, I mean, to me, when you kind of look at it, there's a whole big block of pages that are used by pensions and OPEB and all that stuff. And that's probably 15 of the 30 pages.
Yeah,
And so, you know, that's, if there's any place that takes up space that potentially could be looked at, I think it would be that.
we can.
But there's a whole bunch of stuff that needs to be disclosed these days.
It's fortunately it's in the standard, and you know,
I
I've
know.
kind of said for years, nobody cares about the plan calculation except for people in the plan. Why do we have to put it in the CAFR? Or really what I think pensions should be separate. Those assets can't be used. Pensions should just be audited separately and not even be in the CAFR.
Yeah, I mean, my feeling is there's, you know, the footnotes and stuff, those are largely needed. And it's all the supplemental schedules that are there and they take up a lot of space. And, you know, they're maybe required, maybe not required. I don't know.
Refresh my memory. So how does the Board of Ed fit into this schedule we're talking about?
Yeah, I think
Joanne can help you if you want.
she
Wanna come up,
can-
Joanne?
I think the Board of Ed has traditionally been done by 9:15. I think part of it is because the EFS needs to be done by 9/1. So I think that drives a little bit of your schedule, correct?
Right, so we're done by usually the middle of August with all of our
Right.
posting and reconciliation with the town.
Oh, no, I can't do
Oh,
that.
sorry,
Yeah.
sorry.
Perfect.
So yes, the middle of August, we're pretty much tied up, reconciled with the town completely. We have to file the EFS for September 1st, so that involves all of our funds. Anything that's spent on education goes into that, so we have to have everything tied out.
Good. You know, one thing I'd like to do, hey Kevin, how you doing? One thing I'd like to do, Joe, and Ann and Joanne or Sean, is understand why it takes us 4 or 6 months after year end to actually get the financial statements out. And it may be that just the way life is in government accounting. But you know, I'm on the board of directors of Oracle, and I think the revenue is 50 billion. And they're in 145 countries, and they close their books in 9 days. And they have their report, you know, like 2 weeks after that for filing. And every public company is required to file their financial statements within 60 days. And by law. And you know, it's not to me, it's not a staffing issue because technology and you know, many of them have, you know, lean staff. So I'm not saying what we're doing is wrong. I'm just saying if someone was to ask me the question as the chairman of the audit committee, you know, why does it take the town 6 months, and everybody else in the world 60 days? I don't think I personally have an answer for that. And you all might, but I'd like to just, if we could all agree on an answer, what it is, okay?
Maybe Ann could
If you, and you had some,
No, but some of it
Well-
relates to some requirements you have, right? But
Well, there's certain well, the filing is December 31st. So that's the first part where it is 6 months after at that point, unless you file an extension. There's other criteria based on whether you're a major fund or not, that you have to do these accruals, which means you have to wait, sometimes 60 days to see what your invoices are to get them all in. Board of Ed requirements for the ESF is, September 1st. So that's 2 months at least, and then it's closing. I'm not saying we can't work towards doing that to bring it up shorter. This year is not a year that we
No,
can
that's-
look into it until I can get a full year. But sometimes it's just what the requirements are, and then the timing of, you've got all the different audit firms that have multiple clients at the same time, and they have to slot us in of when they're going to come in. So
that could be wrong, but my philosophy is if you let things go for 6 months, I'm not,
Oh, no.
I'm not trying to suggest that, we're doing it intentionally, but it just creates more work rather than saves work. If you just get it out of the way. So I just think we ought to take a look at it. We ought to understand it. If someone on the town council was to ask, hey, I get these in 60 days. Why? I'm not sure I don't have a crisp answer. It may be a really good crisp answer we could give. We should understand that. And if the answer is that we don't have enough technology, then we should understand that as well and say, okay, well, how could we get more tech? It's not going to happen in 6 months. It's going to take a couple of years to get that done. But, we have a lot of it is already mechanized with the technology we have. And so, and I realize there's going to be things that are tough to move, but understanding it I think would be a good thing to do.
Well, just a couple things to keep in mind is, a government audit is, from an opinion unit standpoint is probably, I didn't count them here, 7 or 8 audits. So it's not one audit. And then we have the state single audit, a whole nother process, federal single audit, a whole nother process. And look at the size of the report. It's 160 pages. Most of the SEC reports are what, 20?
No.
So those are some of the other
Probably
factors.
160 pages, and Oracle probably has 150 reports. Which they have to get done in order to get that main report out. There's one report in every country that they have to file, which they get done beforehand. But anyway, I think we should just go through it to understand it. And we've always sort of puzzled as to why it drags on a bit.
Chairman, could I just ask Joe, the timing we're talking about for this year. So, how does it compare with other towns that you audit or PKF audits, and with Wilton, or I don't know, we worked in other towns? Where are we in
Who's the best?
relation to the
time? Who's the best?
where do we sit? Is this timetable we're talking about now for this year consistent with what you're seeing elsewhere?
It's more
I think it can speed it up. Would like to see it, but where do we sit now?
You're September 15th close is kind of at the front. I have a few very small towns that don't have much going on that might close in August, but it becomes a cutoff issue as far as getting that right. And I'll say one of the things about private sector is they have a system to know how to accrue everything. In government, and in part of that's the way the vendors are, there's no way we can get a good cutoff in 9 days. We don't, there's nothing that's built that we would be able to guess.
That's actually the point. That's actually, when I heard the word cutoff, that's actually what caused me to raise the question, is the cutoff. Is, because if you have a really good button down system, you have good cutoffs. And so that's, but we don't need to belabor it at this point, but we should just get into it and understand it. It's again, it's not going to, as Ann said, it's not going to happen this year. We know that we've already agreed to the schedule. And if we said we could make a significant change, if that was desirable, I'm not even saying it's desirable, it would take a couple of years to get there for sure. You're not going to do that overnight, but let's just put that on the agenda of things.
Okay.
Good. Okay. So the next item is which affects the town, including the Board of Ed, I guess, is the whole new lease standard. What's happening in that area? And that's something we've got to do this year.
Yes, so we've kind of developed, which we'll again go over in our planning meeting, a tool to kind of for the town to load the data, and it will do some of the calculations. So it kind of walks through all the different variables of the lease, what we have to consider to figure out if it's a lease, if it meets the criteria and then all the weird things that may be in there, such as extensions or who can cancel and, how that affects the calculation. So the worksheet kind of columns with the lease and just load the data. And if we have the numbers, there's another worksheet that calculates because it's all on present value. So it's gonna change both the debt side. So there'll be the asset and liability for right to use and what you have to pay for it. And the lessor side, there'll be a receivable and a deferred inflow, which I'm not sure how that makes.
And does that affect the Board of Ed as well?
Yes.
The Board of Ed has equipment which is leased as well, right? So how does that, how far down do we have to go in terms of how small would the item have to be that would be a lease? So for example, using the Board of Ed for a moment, if we have maintenance equipment or buses or
Coffee machine.
Sorry?
Coffee machine.
Coffee machines or then
So that's kind of like the question that's out there, and what everyone is currently in year one defaulting to is your capitalization threshold. So as a lessee, we have to record the asset. So if your capitalization threshold is $10,000, then that's kind of driving. Otherwise, I'm missing that asset. We would have to track. We certainly can pass it from a materiality standpoint, but conceptually, if we're aware of it, it would be a past adjustment.
So
What is the capitalization threshold here?
10, I believe. I have to check.
Is that
on
what it
sir.
is?
Yeah.
I think it's 10. You certainly could raise that.
well, is that the capitalization? Is the capitalization threshold for accounting purposes the same as when we for bonding? You see, I remember one year, one of the bonds, we sort of had a lot of stuff in there that was
Yeah.
kind of small.
50 and above. 50 and above for bonding, otherwise
50 and
it's
above for
capital
bonding.
supported, 50,000.
And 10 and above for capitalization,
Yes, for the asset for capitalization.
but you can't bond something unless it's 50 and above.
Policy,
That's a policy,
Policy.
yeah.
that's a policy.
Policy, town policy.
Mhm.
Right.
So,
Then you would think there should be some maybe not a synchronization between, I mean, so in one hand, you got to sort of calibrate around the three of them, right? When you set the policy, what you're gonna, how much you can bond, and what the capitalization policy would be. And if you raise the capitalization policy, I guess that wouldn't impact the bonding, but
No, I think it's just a decision of how much why would we want to finance anything that's lower than
So-
50? So you buy it with cash versus financing it, which obviously
so
costs
if I'm
more.
hearing it right, you're saying it's kind of, if 10,000, as long as the lease didn't have a present value greater than 10,000, you'd be okay, not
Right, over the
Not
term
doing
of the lease. That's what's kind
over
of
the term of
making
the
it
lease. Yeah, you got to
complicated.
kind of know the term of the lease in order to figure that out. I know.
Right, so 10,000, so I don't think I've seen.
But you're okay if there were 50 leases that were all 9,000, that'd be okay.
If I was aware of 50 leases, then I might do them as a group or something, that would be, but you could technically not do them, so. So a lot of it's just gonna be if I'm aware of it's something that should be recorded, it would just be a past adjustment, which clearly would be immaterial, but we would just
So,
communicate.
so what is kind of the plans and timing, and do you see any issues with
and do we have a list of all
getting
this?
getting the data? Because I know it's an issue, just accumulating the data and having a database to manage that stuff on an ongoing basis. And
We reached
Oh,
out to
it's a
the
pain.
departments. So we got a lot, Tucker was able to supply a lot of them because we have a lot of rental properties, things like that. Reached out to other departments. Joanne had given forward what the Board of Ed has. So now it's tracking down the actual documents, the original lease documents. So copy or lease documents, things like that is where we're at right now.
Who can sign in the town? Who can sign for leases?
It's gonna,
I think there's not that many things that we actually lease. I mean, the Board of Ed does some computer technology.
Technology, that's it.
Yeah, for the most part, we don't do buses. The bus company owns the buses.
the office train.
We don't lease vehicles, really.
no, purchase
So, there's relatively few things. You mentioned properties,
properties and then.
but there's only a handful of them. So it's not that big an issue for us, I would think.
No, the only thing is just getting the documents. That's
Yeah.
all.
So what do you think? You have less than 20?
No, we got more because of the rental properties.
You say rental
Rental
properties.
property.
But we have properties that we lease out that we get rent on.
Both
so.
sides.
On
Yeah, oh,
both-
okay.
Yeah, on both
Yeah,
sides. So I'm
right.
tracking. both
But
sides.
as far as a lessee perspective,
I don't know offhand. I'd have to get back to you on that.
and then you plan on, then you have a software, let's say, that can be used to input the data and kick out, let's say, kick out the
The
numbers that you need to book for the
Present
balance
value.
sheet.
Right, currently it's Excel, but yes, it still does the calculation if you put the
So
data. in.
it's an
So
Excel.
there's really like two worksheets, one that will just plot the lease terms so we can evaluate it, and the second part would then,
Is it lease by lease or is it?
it's
so
lease
it
by
doesn't-
lease unless you had a lot that were similar.
Lease by
so-
lease, and then you just add up all the different sheets.
Right, and unfortunately, lessor side is more complicated because it's by fund, because you have that rental fund, so if you did stuff in general fund and stuff. Leases in the rental fund, then we're gonna have that lease receivable and deferred inflow in both areas, and then enterprise fund. Is a separate calculation for reporting.
So all the
purposes.
different, all the different schedules, and again, I don't pretend to know all of them. But all the different schedules, do all those individual schedules where they've got like balance sheets and so on, do they all have to have the lease numbers built into them? Or is it just top of the house? Kind of all you need?
Well, lessor is in the back in all the funds. Lessee is just up top. Like debt is.
So you don't put the right of use asset and liability on, for example, the internal service fund schedule.
Well, that's a tough one. Internal service, if it had it.
I'm just
it's
making it up because
proprietary.
that's the only thing I was thinking
So
of.
your proprietary, your lease fund, or if you leased out a special revenue, like whatever type fund.
But all those different schedules that have different,
Yeah, it's just if it's in the back,
whatever.
not
the
the government
pool.
wide, then you're gonna have the asset lease receivable and a deferred inflow in the back. So
Hmm.
by funds, so. To manage that easier is maybe having a lease fund or your budget differently, but that's something now that's a couple years out to look at it differently.
So if you look back either at the Board of Ed or at the town, what, from a business standpoint, forget about how the numbers get into the schedule, which is also important. What does this mean? Will it change any way the town operates or the Board of Ed operates going forward? I mean, will it limit? I mean, maybe the numbers aren't that big, in which case it just doesn't matter. But will it limit anything we do, or will it enhance anything we do in terms of being able to?
My opinion, no. I mean, what it's gonna do is take your rent payment, and it's gonna split it to interest and rent.
Period, amen.
That's pretty much what it is. For the present value calculation, we're just gonna split the,
And there's no area where, even though maybe it's not material here, where something gets capitalized, there's no limitations in any of the government reports or no. I mean, some other town might have, lots and lots of leases, and does it just not matter? Does capitalizing it, or does it work into any calculations which might set limits on the town as to what they might do in certain areas?
yeah, I think it's just all financial reporting. I don't think it really is gonna change much. I guess it gives, again, your bondholders to know your lease commitments. I mean, that's really what drives these things, is people just want more information. What are the things you committed to pay on the lessee side?
Mhm.
So it seems like that market
Which,
drives these disclosures, because I don't know if
Which-
there's any value internally at all.
And why are we so confident from either the Board of Ed or the town standpoint that, we sort of have all the leases and, or, we may not have them in front of us right now, but they're available to us, and that it's not going to be a problem? Because most companies that went through this thing was a laborious task that took sometimes a year or two.
I mean, I managed, our company, tens of thousands of leases. It's amazing.
Are we talking only
it's a-
equipment leases, acquiring
an
things that you
exercise
need to
in-
operate the town?
waste of time.
Every,
Real estate leases, both ways,
oh, yeah,
ridiculous.
everything.
And you can
ground
imagine
leases?
the time.
Yeah, they're exempted for like $1, but anything that has real payments. It's every type of lease.
But I don't think, again, I go back to the notion, we don't have that many. For example, we lease
That's a different
copiers
standard.
because we want a maintenance agreement from the company. So
Right.
we're really renting the service of producing copies. We just don't want to own them without a maintenance contract. So.
All right.
And everything has to be. The department head can't go out and commit to a lease without putting it to the financial department or anything of that nature. So you feel like you've got
Contracts with
everything
these
buttoned
two.
down.
Or-
You can
sign
always
every contract.
analyze.
I sign every contract on the town side.
Okay.
Nobody has delegated authority to sign.
Ty-
contracts.
Typically, you'd analyze your lease expense and make sure you've captured all that.
Mhm.
So, I mean, that's something for budgeting going forward is to separate that stuff out clearly, because I mean, I see it all over the place in practice. It's in the technology budget. It's in contracted services. Everybody does a little bit differently. So that's something from a budgeting standpoint would simplify the process. If everybody had kind of a lease.
I think as a practical matter too, if you can borrow at 2% and these leases probably have an embedded interest cost of 7 or 8 or 10%, it's cheaper for us to
Right.
capitalize things.
Right.
Okay.
So.
Great.
Keep us posted if there's any issues, but then that's a pain.
When do we have a target date for getting that done? Because if that's October, it's new, so that shouldn't be October, right? That should be end of August, September. Leases. I mean, otherwise, if I don't want to get to October, find out for some reason, something popped up that we didn't realize, so. Maybe should have a target date earlier the new thing should be done before the old thing, I would think, right?
Yeah, ideally it would be a little bit, because there are some modifications to the financials for that.
I don't want to file
accounts.
for an extension. Someone mentioned the word extension before. I mean, that would be an enormous step backwards. So, you got me to slide, the date, but extension will be well, acceptable if we have to, but not a good idea. Okay. So how about other issues? Well, we talked about leases. Anything else new? Anything else you're considering? Anything on the horizon, either Joanne or Ann or Joe that we should be concerned about issues or anything?
No, I think coming up, which is similar to leases, there's the software as a service. There's some different accounting for that. So if you're kind of leasing software, that's been carved out as a different standard. So that's not effective this year. But again, I think that's a much smaller population. That won't be hard to manage.
No, maybe, I believe that I don't know where that would fit in, but you have some upgrades to your
We did-
units
well, we're doing
that
a,
you're gonna be working on. Maybe you could just talk about that.
So we're
a
in the
little
middle of
bit.
a banking conversion. We also have to upgrade our financial system. It's sunsetting at the end of this year. So the end of July is the time period where we get it as a train environment. They can't actually upgrade us till December. So we have a lot of Mike. So we have a lot of work between there and then. I think we're like 5 versions back. So we will be going from a dashboard to a hub and changing that process. Like I said, we're going into year end. We're down a staff member. I'm new, trying to get through the process. So it's going to be a challenge, but we'll get through it with all the different things coming up on it.
The change in the July change, but not being implemented till December. How does that impact the close and the financial statements?
It won't. The train version is where we're all going to start, learning how the new software. We have a lot of things we want to put in place. In the accountant retiring, I've gone through the job. There's a lot of manual processes that we can actually simplify and streamline. So that's just time consuming as well to get that all set up, but it will get set up to streamline it. But the conversion won't affect it because we're going to stay on the current version to get through the audit, year-end audit. We didn't want that to happen, going on a new system and then trying to close.
And so what was and then you mentioned the change in banking?
There was an RFP put out, so we're doing a conversion over to a new banking system.
To a new banking system.
A new bank.
That's Chase, right?
Currently, JP Morgan Chase.
Thing that Andrew was been working on, right?
Yeah. So there's a lot of change happening right now.
Okay, good.
So just to let you know, on the Board of Education side, we too need to upgrade our munis. We have worked in the train environment for several months now. We're scheduled to do our changeover on July 15th. In our case, it's less complex than on the town side because we're mainly a expense operation. So we feel comfortable doing it during close.
How is Munis working with you on that? Is it, you feel, I mean, is being pretty supportive?
They're supportive. They are, they have many, many clients who have to go through this changeover because they are sunsetting at the end of the year. And so we've been in their queue for 7 or 8 months. It's been a long time. But we feel like, once we get into that turnover, it's a weekend over a 1 night period. They walk us through everything. So they're
So should
supportive.
we be, since, maybe I'm reading this wrong, but do we need to, they have a lot of clients, as you said, like you've been in the queue for 7 months. I'm just a little nervous that could we be in a queue for 7 months and not be able to close on time, or maybe, I'm not sure what the conversion is, or impact timing of the audit, or
It won't, we're gonna stay on the old version the whole time, so it won't impact us, and then we don't go
then we
live
switch
until
over when we
December.
can. Yeah.
So we should be done. We're hoping, because December is more quiet typically,
Yeah.
people are away, so we can do it then
Okay, great.
for
Good.
us on our side.
Anything else we should be worried about? I mean, would you get all those filing cabinets cleaned up before your retirement day?
I've been working hard at that. No, and I'm a phone call away, but everything's running fairly smoothly over there. I don't see any big alarms going off, so we're fine.
So they have to back up to clean your office out, a U-Haul? Or a Volkswagen?
A Beetle.
A Beetle. Perfect. That's the right answer. You said it all to Brian last week, right? Good. Okay. So I think, in terms of the audit plan, I think we've got that covered. The engagement letter, which was approved by the Board of Selectmen and the Town Council, is in the material. Probably, does anybody have any comments on that or anything we need to discuss on that?
I had one
Sure.
question. In the engagement letter, and there's a mention of some control work that could be required, or additional testing that could be required or could be asked to do by the state, maybe for state or federal funding, which might be the
American
American
Rescue.
whatever
Plan.
it's called, rescue plan, or maybe some other things. And if that were, and my feeling or understanding is that it's unlikely that you would be asked to do something like that for New Canaan, but it could be. But the question was, what does that entail? Somebody had asked, well, should we be doing some more anyhow in that area, just to make sure that it's something that we look at and don't wait for somebody to ask. So maybe you could comment a little bit about what that extra testing on those, grants or whatever they are, might be, and then we can maybe talk about over time whether there's something we should be doing anyhow. Let's put it that way.
Yeah, that's in there because normally they don't issue the compliance supplement till August, so they don't tell us what we have to do. So if the example would be, if ARPA, we normally test 40, that from a control risk standpoint. If ARPA came out and said you got to test 140, well, then it's gonna take more time, then I would have to bill more. So that's what that is there for, is if I don't know what I have to do, then I couldn't really estimate the fee at the time.
Yeah, and I'm not even talking about it from a fee perspective. I'm talking about it just from a control perspective. And is there anything that we should be considering doing
Yeah, you were saying.
anyhow?
You were saying there might be things we have to do and there might be additional fee, which we understand and we agree with.
Yeah.
So we had a question from the town council, was forgetting about whether there's a requirement. Should we be doing more work in this area anyway?
Yeah, there's nothing from a control standpoint that would say that would drive me to that conclusion. You certainly could test more, like, again, the standard sample size for compliance work is 40. I don't know how many transactions you have, so that would just be a town decision on what level of comfort, or look at everything over X. or, you know, if you just wanted some
So
additional,
maybe we just should leave it since sort of we had a question, you know, assuming we don't have to audit it, assuming there's not a requirement to it, in which case I think we're okay. If you could just do some work in that area, you know, extend your work a little bit. I don't mean a big thing, and just allow us to understand that the numbers, those numbers themselves are substantially correct and materially correct, that you looked at them, opposed to just being able to say they will blow your threshold, and you didn't even look at them at all. Okay.
right, expand the scope in number, or is there a dollar
Or maybe they. maybe-
threshold? I mean, I don't, I'd have to look at the
Or maybe
data
we
to
could
be
just
able
Take a
to.
look at it and come back to us and ask
Yeah.
us, you know,
Okay.
how you do it.
And maybe you
Talk to-
do your work and
talk to
we can
Joanne.
discuss and see whether you think it's something we should do more work on or not.
Are we talking only ARPA? Or are we talking other grants?
Yeah, I'm not sure if you're, I mean, there's a lot of other stuff like ESSER is part of ARPA indirectly. It's just called something, that's the education side. So I don't know, is it all the new federal funding? Like CRF is kind of over with, so now it's ARPA and ESSER, and there's some,
Why don't we take that offline? Just come, you know, we're
Okay.
trying to be responsive to a question we had, and I think if all of it's audited, it's fine, but it just, you know, you could be in a position where you sort of audit everything, but never look at anything in those particular areas, and that, you know, that wouldn't be a good answer for us at that point. So we need to, not trying to overdo it, but just make sure we can be responsive.
okay, yeah, we'll look at what programs. I
Yeah,
mean,
do-
ARPA, if you spent over 750, it's gonna be tested.
Yeah.
Or
Or maybe,
even if you
maybe
spend-
even understanding some of that might be.
Yeah, do what you normally do, and then maybe we just
Okay,
talk
so
about
yeah, we don't
whether-
have the
whether it makes
data.
sense to do anymore.
Yeah, and then ESSER, I mean, they're considered higher risk, not high risk, but higher risk by the feds, so we have to look at them. We can't scope them out of the audit if the expenditures are at a
Higher
certain
risk
level.
because they're funded because you're getting funding from them. Is that why the higher risk?
I think just those programs, because obviously there's a lot of federal funding, those two, they identify as higher risk than, which means
Right.
I shouldn't assume they're low risk programs. 'Cause we have to
Higher
do
risk,
that.
not risk in the sense of the way the money was spent, but risk in the sense that it was funded by somebody else and therefore they could challenge it. So therefore, higher risk, there's a stakeholder outside of us that's looking at that.
Yeah, I think just from the federal government throwing all that money out, they just,
Yeah.
they want as much of that audit as possible.
Yeah,
So-
no, yeah. So it's nothing we should be worried about from a
Right,
town
right.
standpoint. It's just part of the process. Yeah, that's what I
Right,
wanted to make sure.
exactly.
Good. Okay, great. So in the interest of moving along, is there anything else that from an audit standpoint, I think that I just like to note on the MD&A, as George said earlier, we would like to try to get that earlier in the process rather than, you know, this, particularly with the change in timing, that could slip to be the very last thing, and that wouldn't be good. And I would think even without the numbers, you could probably get a lot of that done ahead of time. So the other thing is the internal audit discussion. We've because of COVID, we didn't go back and renew the internal audit process at that particular point in time. But I think we'd like to start that, at least start to think about it. And we thought maybe the way of doing it without jumping into an RFP would be to put out an inquiry or request for credentials or request for, who would even feel like they were capable of doing it, so we could really understand it. And then we can work with, you, and you can work with Sean on this as well. And then, which of the firms would even have the people to do it? As we talked about earlier, a lot of the firms are down head count. So, and then once we understand, what the qualifications are of the firms, who we might put into the thought process of considering, and then we can consider about going out for an RFP at that point in time. So just some statement of interest and a statement of qualifications might be. Joe, do you, if you could help Ann understand what firms you've seen out there that actually do a pretty good job in this area? Your firm couldn't do that. But, because of, you could do some special work if we asked you to do it, but you you couldn't be the internal auditor.
Correct.
Yeah.
Yeah, we could do a
Yeah.
review a special area, do some detailed
Could
testing.
extend your testing and things like that. Yeah.
Yes, exactly. So if there was something like that, but to be internal audit, that's an independence problem technically, so.
What
Okay.
timeline would you be looking at for this?
I mean,
What timeline?
well, I don't think we should feel like we have to rush into it, but I mean, I think if where we were in the middle of June now, if we could sort of get a letter out the next 4 weeks to ask people, get a letter out just asking them to come back to us with qualifications. And I think, what they would, I think our time would be driven by what we read in those letters. And we probably should send four or five letters out.
And what time are you looking for? I'm just trying to think of the whole scope of everything that's
Yeah,
going
yeah.
on right now, conversion on when would you be looking to engage someone to come in?
Well, if we got, if we got something back at 4 weeks and say 2 weeks to read it, and then we determine whether in fact there was anybody out there who had the resources to do it and could make a difference and add value. Then maybe that might be 2 weeks to make that decision, and then 6 weeks to give them 6 weeks to get their proposal in. So now you're talking 3 months almost. We're talking the end of the summer. And then at that point, we can, we have to select the firm, and then we can decide, what their start date at that time. So I would say the fall, the earliest, even maybe the first of the year. And then then the question is, hiring them, and then what would be their first project? When would they do their first project? We'd scope that out together. Last time, what we did is we worked on projects collectively. I mean, the audit committee had the ultimate responsibility to decide what the project was, but we got input from Joanne, we got input from Brian, we got input from Kevin. I think Kevin, we think we were doing this with you, or maybe it was Rob. I forget. Maybe it was even, it's been a while since
First time,
we get input, and then we would decide where we would go.
I think you got to be particularly careful as to staffing. I think that these firms are a little more susceptible to staffing problems.
Right.
And the last and only one we had, 2 of them died on the job. I don't know whether.
Yeah. Not figuratively.
Literally died on the.
This is a tough job.
It was unfortunate. Both of them got ill. So the end of the contract was a little bit challenging, but they did some good work in the process.
Could I ask Joe what the incidence is of your audit clients that have external, internal audit functions? I mean, it doesn't seem like there's that many vendors out there.
That have external, I don't think any of my clients have external. I have a couple that have internal, but not external.
It's kind of a rare bird to find these firms that'll do it.
Well, there's plenty
In
of
municipal
firms-
work,
there's plenty of firms that do the work. The problem with an internal auditor is they're not independent.
Well, that's because the charters need to be designed correctly. They report to the audit committee, not to management.
Yeah.
That's the part that gets
Not independent.
right.
And then we have another issue too, which is, the separation of the town and the Board of Education, which has been a challenge, and rightfully so. I think some of the projects we did, when we had some challenges, in terms of, challenges in terms of us working together. We had some challenges in terms of some of the things that people were looking at. And we got to great answers because we had, so I think we have to be sensitive to that. I think while the internal audit was designed to report to the audit committee, I think they were sort of intended to be helpful to the town and to the Board of Education separately in terms of stuff that they wanted to look at and go through there. And so that'd be the way we would think. But again, we were trying to approach it with an open book. So that doesn't mean we should use the same model we used last time. That's why I want to go slow and really understand it, opposed to just jump into it,
Chairman, are you thinking, getting letters, statements of qualifications, local, regional type firms, or could it extend to sort of national, like Protiviti, or who clearly could do
I
the
think-
work, but are quite expensive? But
I think it could.
what's your thinking?
I think it could extend to a Protiviti, for example, because they are national, but they're substantive, and therefore they have the resources. The
Yeah, they
last
got the
time the
res-
problem
yeah.
was we selected a firm that was, they were a good firm, but I think they were headquartered in Pennsylvania. And it was a little bit far for us. And so I think the answer is not restrictive, but if it was national, it would be because they had resources and, you know. I mean, productivity, I don't know if they have an
I mean,
office.
I'm not
Yeah.
a particular fan of Productivity. I'm just throwing
Yeah,
out
no,
the name of a
nor am I, but
large
they're a good firm,
national,
yeah.
international firm,
Yeah, I
which
wouldn't-
clearly will have
the
resources.
big four firms.
Yeah,
And
of course,
productivity
yeah.
probably would not even respond to any of the requests. It's just the
No,
pricing model was just so
we
different.
would find out, yeah.
Okay, let's jump along here. So then, the last item we have is the review of the monthly financial statements, both Ann and Joanne. And I guess Diane, if you're going to participate as well. So, and then maybe an update on bonding plan. So where do you want to go? Do you want to go to the financial statements? Is there anything we should focus on there? Chuck, you want to lead this portion?
Yeah, I think we have, everybody has, April, I think, from Joanne.
May,
And I think we have May from,
Yes,
Yeah.
made for the town.
and so maybe just highlight anything you might want to highlight. We have what you sent in front of us, I think.
Yep.
Or have availability to it. So
Okay, great. So the Board of Education has reviewed their financials through the end of April. Tonight, we have a meeting to review our financials through the end of May. So we're currently a few weeks out from our close. So we're starting to wrap up a lot of the transactions, encumbrances, and so forth. One of the challenges we have had this year is the supply chain. A lot of our goods and not our services, but our goods or our equipment have been delayed. And so that's going to be a conversation we're going to have today with Joe and his team to work on that. Normally, we try to get our encumbrances down, below 100. Last year, they were at 300. We still have a few items from last year that we haven't even received yet. So that's one challenge we've had. Overall, the ARPA grant and the ESSER have actually helped us in the operating. Not that they've supplanted, but we've been able to utilize some of those sources of funds to mitigate some of the expenditures we would otherwise have. We do expect to return money to the town. The exact amount is yet to be determined, but we do plan to have funds remaining at the end of the year.
Joanne, just I realize a general question, but the supply chain issues is also driven your cost up as well, I would imagine.
Transportation has been a surcharge now, whereas before it used to be included.
Right.
So that's, and it's really just a matter of, like, even our paper purchasing, which in the past was just a replenishment item. We
Right.
go through a lot of paper. Now we have to go out beyond our, the state bid vendor and get a bid price from other vendors so that we can actually receive paper, because it's a shortage right now.
Right.
So those are it's just one example, but we use so many supplies, so many different types of equipment, furniture for our students and so forth. And it's just been tough this past year.
I have my usual pet peeve. I received.
You have a pet
25
peeve, you gotta get the microphone close to you. Everybody can hear your pet peeve.
So it gets minuted, yeah.
and, I say this with a full understanding of the problems
the Board of
involved.
Education came.
But I received the town report for May yesterday, Father's Day, in the afternoon. I must say I didn't have much time to look at this, so if we can get these reports a little earlier, maybe 2 or 3 days in advance.
That was my fault. Chuck had asked me to send it out on Friday when I was in the office on Saturday. I had it in my
But-
sent file.
But I
Oh,
think we have a standing.
I
thing
didn't. I
send
need to
out
get
when
it so
when
much quicker.
For example, Joanne, I think there's somebody in your group that sends it
Yeah,
out.
she
whenever
sends
it's
it out.
available
She sent it
every
on the
month.
18th, but I sent it yesterday just to make it easy to have it
So,
available.
yeah, so if we
I
could
will
just,
definitely get
we
it out.
just set it
right
up
a
so it
week in
comes
advance.
every month.
Yep.
And just when it's available, just send it.
As soon as it's available.
Yeah.
Yeah.
As soon as it's
Automatic.
available, just send it.
No,
Unfortunately,
yeah.
our board reviews the financial report, their second meeting, because their first meeting's on the first Monday of the month and we're not closed yet. So we have a policy or a procedure that we don't send it out until they have an opportunity to
Yeah,
take a
that's
look
fine.
at it.
Sure. Good.
From the
Okay.
town? Anything?
Finance?
On the town side, the revenues are coming in, obviously, conveyance and then tax and then some land use. So we expect to be only using 3 million of the fund balance that was budgeted to use to about 5.2. So we'll, on the revenue side, we would only be pulling down 3. On the expenditure side, we're looking at coming in budget right now, only because of the utilities. They have skyrocketed for us. So, something that was in January, $1 something is now $5, $6. So the Tiger and his staff are going through right now to give us year-end estimates as best they can give us where we stand, so we can get a full idea of where they are. And then we'll have a better understanding of what next year's going to look like the first couple of months. So expenditure wise, we think it's going to come in on budget, and then the revenues are where we are over budget, which is a good thing on that side.
Yeah, are the revenues as much as, I know we always under budget the revenue.
On the tax side,
Did
so
we, did we do as well as we?
yes, the taxes are about
Because it
1.
seemed like there was a 5 million shortfall, right? Or something like that, not shortfall, but 5 million that was not taxed of what was needed.
So we're using the fund balance 5.2 million to balance that budget. Exactly. So we
Right,
didn't tax
and
that
you're
5.2.
Typically in the past, my general understanding is we've been able to, find that 5 million through either the revenue or expenses.
Right now,
And
we've-
right now it's
2 million in revenues right now. That we have over. So right now the drawdown would be 3. That we would use, waiting to see where the expenditures are with all the utility bills that we need
is
to
the
book.
2 million about what you thought,
The revenue
or
side?
is it down? That's the question, I think, kind of. In other words,
Are you saying-
we under budget, but you really have an idea as to what you think it might be.
Well, the conveyance one was tough because we didn't know where that one was that was over last year significantly. So this year it's starting to trend back down again, not still high.
Yeah.
The taxes are coming in where you thought they were going to come in because that's been a stable collection rate. So that's another 1.5, 1.6 million of taxes that are over in total. And we still have, about another month to book still on that.
Did you did you anticipate the conveyances at the higher rate, or did you at a more lower normal rate
For next year's budget?
for the year we just finished?
I can't, unless I might have to, I need help. I can't speak to last year's budget on how that was decided. This year it was taken down a little bit for 23, but 22, I can get that answer back to you on how they.
That's fine. Great, thank you.
I'd say it was somewhat conservative.
Yeah.
It was-
Yeah.
Year before was crazy, so we didn't expect it to remain that way.
Good.
So very-
Okay, what about bonding plans?
So we'll look to around September to go out for bonds, to look at all the projects now that we're looking to see what ones because we typically do it in reimbursement side versus bonding up front. And then it ties into also with the library on seeing what we might do with the letter of credit that right now is being discussed.
Right. Good.
So around the September timeline.
And the only other item I had before on the library, are we pretty much on course with the, commitments we made to the library and sort of how much we paid or had to pay? And
Yeah, let me address that. So they've taken down the full $10 million grant. And then with the borrowing facility to fund their receivables, they expect to begin borrowing probably now February next year rather than October, because their cash flow they're doing very well in their fundraising. And we anticipate the high might be $7 million rather than we actually committed to $13 million, 1/3 of the project cost. So the high of the borrowing may be $7 million, and then they expect to repay, I think, February 27. So it's just a bridge to get all the pledges paid.
Kevin, did you say the 10 million has been paid?
$10 million grant.
It's gone out.
They've taken all that, right?
Oh,
They're very much on schedule.
I
with
thought
their-
you said that. Yeah.
Very much on schedule with their construction projects, and they expect to open February 1st. So
Right. Thanks.
$39 million project is
okay, other items? I think we're at the end of the agenda. Other matters, including adjournment, but Robert, you have anything?
No, I have nothing else, Mr. Chairman.
Ed, do you have anything else?
Sorry, it's on mute. No, that was fine. Thank you.
Good, Ed, thank you. Does anybody have any other matters they'd like to bring to anybody's attention? Joanne, when is your last day
The 30th.
of June? You don't want
We're
to stay
gonna
till
be
August.
Helping out over the summer with the clubs. It's been a pleasure knowing each of you. We just.
Pleasure having you
Thank
with
you.
us. Thank you
Feel
very
really
much.
good about our work together. It's been a
Good.
pleasure learning from you.
Thank you.
Thank you.
Sean, the last time I had to call Joanne was just, they were selling tickets for a sporting event for cash. And I called Joanne because I had seen something somewhere and she said, Bill, it's under control. I've got all the numbers recorded and I'm counting the cash myself. That's sometimes, this might seem a little high level, but sometimes we can get into the details. Thank you very much. Joanne, thank you very much.
Thank you.
Jern,